This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, January 2nd, 2015. Euro dollar. So the euro remains under pressure into early 2015 with the market finally breaking down to take out the key 2012 base at 120.40. The break below 120.40 will expose the next more meaningful longer-term support, and if we look at the monthly chart, this takes us back to the 2010 base, which comes in at 118.75. Once again, only back above the 50-day moving average would compromise the immediate bearish outlook in the euro. Sterling dollar. Cable has rolled back over in recent trade with the market stalling out after a recent consolidation, a minor consolidation. Overall, the price action continues to favor the downside in this market with a break seen below the recent 2014 low that came in at 154.85, with the break to then open the door for a measured move downside objective down into the 152.50 area. Ultimately, only back above the high that we had seen on the November 27th at 58.25 would compromise the bearish outlook. Dollar yen. Dollar yen is once again trading with a constructive tone after the market recently based out at 15.55 and is looking to put in a higher low by that level ahead of the next major upside extension beyond the recent 7-year high at 121.85. A break above 121.85 will confirm that 115.55 higher low and open the door for a move towards 125 further up. Ultimately, only back below 115.55 would compromise the bullish outlook. Euro Swiss. Euro Swiss continues to try to carve out a meaningful base, a longer-term meaningful base, but the market will need to establish back above previous support at 120.45 to achieve this goal. Inability to close above 120.45 will keep the immediate pressure on the downside and a focus on a potential retest and violation of that critical barrier at 120. Aussie dollar. Aussie dollar remains locked within a very well-defined downtrend, with the market most recently stalling out into a correction and looking poised for a break to fresh lows down towards the next key psychological barrier at 80. Ultimately, any rallies in this market should be very well capped up towards the 83-84 area, with only a break and close back above some key previous support at 85.40 to compromise the bearish outlook. Dollar CAD. Dollar CAD continues with its constructive tone and is looking for fresh 5-year highs towards the 1750 measured move objective over the coming sessions. Any setbacks should continue to be very well supported ahead of previous resistance at 114.65, while ultimately only back below 113 would compromise the bullish outlook. And Kiwi dollar. Kiwi has been locked within a bearish consolidation over the past several weeks, although the market does favor a fresh downside extension given the broader underlying downtrend. A break below the 2014 low at 76.10 would help confirm this outlook and expose deeper setbacks towards a measured move into the 72 area. Ultimately, only back above the consolidation high at 80.35 would compromise the bearish outlook. SPX 500. The S&P 500 has recently stalled out after failing to test that 21 barrier, that key 2100 barrier, but the market still trades by just off those recent record highs, and the overall structure continues to be constructive. Look for a break and close back below 2060 to open the door for a potential correction and suggest that a top could be in place, but until then, the focus does remain on the top side and a potential break of that key 2100 barrier. Gold. Gold remains locked within a key multi-day consolidation. Key resistance comes in at 12.56, while support comes in by those multi-year lows at 11.31. A break above 12.56 would do a good job of suggesting that a medium-term base or a key base is in place and take the pressure off the downside, while inability to take out 12.56 will keep the more immediate pressure on the downside and a focus on a retest of 11.31, which guards against that critical support at 1,000. That's all for this week.